Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, and it's March 10th. We do got some important news today, but it's not, even though that was terrific news, as you can see. We've had, last week we had 277,000 people apply for unemployment. It was supposed to still be in that, or expected to be in that range at 275, and you can see it dropped down to 259,000. So that's a pretty low number. That's good overall. We haven't seen this number this low for a while. Also, something to note on this, we've been under, unemployment claims have been, each week, it's been, for the past year, have been under 300,000, which is also very good news. We haven't had that type of a streak since the 1970s. So this kind of tells you about the job market, showing some improvement, and why the Fed is, which is important for next week, why the Fed is feeling a little bit more comfortable about where things are moving, and why they've been tightening up a little bit to get ahead of the curve, even though inflation's still been low. So let's kind of jump into it. The stock market actually is down now. I'm sorry about that. Stock market was up earlier this morning on the news of the European Central Bank, the ECB. They did their meeting, and he announced a lot more aggressive measures than the investors expected. So the stock market was actually up, even though there was a drop in oil prices. And typically, we've been getting a lot of correlation between stock prices and oil prices. So if oil's up, so the stock market, oil's down, the stock market comes down. So initially this morning, they kind of were swiping that news aside with the oil prices, and we're going on. Kind of caught on with the news with the European Central Bank's news, where basically they cut their rates even further and basically increase their stimulus package purchases, bond purchases, like the quantities that we had here, from 60 billion euros to 80 billion euros, or 80 billion euros. So they increased it. So it was a lot more than what the investors out there were expecting. And initially, it started well. Now, actually, the stock market's pulled because the drop in oil prices has further eroded even further down. So now it's taking its cue from the oil prices, and the novelty of the European Central Bank's statement kind of is wearing off, at least here in the U.S. here. Bond market, we were down even further, and now we pulled back, and now we're about 3 basis points. As the stock market was up and it came down, the bond market was further down, and now we've pulled back a little bit. Now we're about 3 basis points under from where we left off yesterday. So if that continues into this afternoon, we could see an improvement here in the bond prices. But as a result, at this time, we shouldn't have really any differences in pricing from where we left off yesterday. Now, East Coast may have had some price changes because they started off 3 hours before us and may have had worse pricing. But here on the West Coast, we should have about the same price where we left off yesterday. All right, folks, I hope you guys have a great day. Thanks so much for watching. And then remember, next week, we do got the Fed meeting next week. So it'll be interesting to see what the ECB's announcement, how that will affect the FOMC next week. Take care and have a great day, and we'll see you guys tomorrow. Thanks again for watching. Bye.